A significant shift in North American economic and diplomatic relations has occurred as a long-standing partnership between the United States and Canada undergoes a rapid and severe rupture. The transition from predictable cooperation to high-stakes volatility took place within hours, following a strategic decision by President Donald Trump aimed at securing Canadian critical mineral resources. Citing national security priorities, the U.S. administration issued a sweeping executive order utilizing emergency powers to demand that Canada sell its rare earth and lithium exports exclusively to American buyers at fixed prices below global market rates. The move, framed by the White House as a step toward resource independence and economic nationalism, was designed to pressure Ottawa into compliance. However, the assumption that Canada would negotiate or soften its stance proved inaccurate. In a decisive counter-response that has stunned global markets and industrial sectors, Mark Carney announced a complete export ban on 17 critical minerals to the United States, effective within 72 hours. This immediate retaliation bypasses traditional diplomatic channels and gradual escalation, targeting the core of American industrial and defense infrastructure. The suddenness of the ban has exposed significant vulnerabilities in supply chains that were previously considered stable. Industries ranging from semiconductor manufacturing to electric vehicle production are now facing immediate uncertainty as the decades-old blueprint for mutual trust and shared prosperity is replaced by a controlled economic rupture. The core of the current crisis centers on the immediate fallout from the 72-hour export deadline, which has sent shockwaves through the American defense and technology sectors. Internal assessments within the Pentagon have revealed a critical vulnerability in national stockpiles, with data indicating that reserves of several key minerals, including cobalt, nickel, and rare earth elements, are significantly lower than previously estimated. In some instances, the United States holds less than a 90-day supply, a time frame that analysts suggest is insufficient to maintain full operational demand. This shortfall directly impacts the production of advanced military hardware, such as the F-35 Lightning II, which requires specialized Canadian-sourced alloys and rare earth magnets for its engines and electronics. Defense experts note that these components cannot be substituted or sourced from alternative suppliers without lengthy redesign processes that could span several years. Beyond the defense sector, the economic impact has manifested sharply in the financial markets and the automotive industry. Following the announcement of the ban, semiconductor indexes and tech stocks experienced rapid declines, erasing billions in market value as investors reacted to the threat of production halts. Major electric vehicle manufacturers, including Tesla, are facing unprecedented uncertainty regarding the supply of lithium and nickel, which are essential for battery chemistry. Industry leaders have warned that without these inputs, production timelines for North American facilities will be disrupted, potentially leading to plant shutdowns and increased consumer costs. In the semiconductor field, Canadian rare earth elements are vital for polishing wafers and refining high-frequency chip materials. Analysts from firms such as Intel, AMD, and NVIDIA are currently conducting risk assessments, as even minor delays in the upstream supply of these minerals can cascade into significant shortages for smartphones, medical devices, and artificial intelligence infrastructure. The strategic landscape of this conflict has shifted as Canada moves to diversify its global partnerships, moving away from its traditional bilateral reliance on the United States. Mark Carney has accelerated high-level discussions with European and Asian trade partners, seeking to reroute mineral supply chains toward the European Commission, Japan, and South Korea. This pivot has already resulted in renewed investor interest on the Toronto Stock Exchange, with mining valuations surging as international markets respond to a more diversified Canadian supply model. While Ottawa strengthens these external ties, The internal situation in Washington remains deadlocked. Advisors within the administration are reportedly divided between proponents of aggressive retaliation, including potential tariffs on Canadian oil and energy imports, and those urging de-escalation to avoid driving up domestic fuel prices and further straining industrial manufacturing. The broader consequences of this standoff are now being felt by labor unions and manufacturing associations, who warn that prolonged mineral shortages will lead to systemic inflationary pressures and job losses across the Midwest and other industrial hubs. Beyond North America, the situation has served as a catalyst for other resource-rich nations to reassess their own export strategies. Countries such as Australia, Brazil, and Chile are observing the effectiveness of Canada's precision leverage, leading to a global conversation regarding the use of strategic materials as a counterweight to traditional economic power. Whether this leads to a negotiated settlement or a permanent realignment of global trade, the current crisis has effectively dismantled previous assumptions of regional stability.
The outcome remains uncertain as the 72-hour deadline approaches, but the structural exposure of the American defense and tech sectors has been clearly identified, marking a potential long-term shift in how global resources are managed and contested. Subscribe for further updates on this developing story as we continue to track the economic and political fallout.